allegedly made over $1 million in profits. He's the creator of Quarterly Theory, a real-life cheat code for ICT trading and something that changed the ICT space forever. On his Twitter, he's been publicly calling price beforehand, showing live executions consistently for over a year, and he's also managed to achieve a 92% hit rate with his Quarterly Theory. It all revolves around the idea of dividing time into 4 quarters, AMDX or XAMD. If you understand this and apply it to your charts, a whole new world opens for you, and nothing will ever be the same. Ever wondered how ICT got the times of his kill zones? Yeah, that's Quarterly Theory. Let me explain. Since time is fractal, you can use Quarterly Theory on any time frame you want. For example, the monthly cycle is comprised of 4 quarters, 1 week each. The daily cycle can also be divided into 4 quarters, which align with the 4 trading sessions of the day, but it can go even deeper than that. These 4 sessions can all be divided into 4 quarters, 90 minutes each, and we call these the 90-minute cycles. Quarterly Theory can be divided into 2 sets that the algorithm tends to follow, AMDX or XAMD. AMDX stands for Accumulation, Manipulation, Distribution, and X is either continuation or reversal of the previous quarter. XAMD stands for Continuation or Reversal of the previous quarter, and Accumulation, Manipulation, Distribution. But there's a catch. The algorithm usually follows these 2 sets, but it doesn't always have to do that. You have to understand that nothing will always work with a 100% hit rate, and what we are doing here is not predicting the future. What we are doing here is learning how the price books most of the time and how to react to it. Think of it as a simple formula. If the price does X, we can, with a high probability, expect the price to do Y. And if the price does X and follows up with a Y, we can, with even higher probability, expect the price to do Z. But as I've already said, you can never be 100% certain what price is going to do. There are external factors like news and real-life events that can heavily affect the price and its next direction. I'm not saying that Quarterly Theory cannot work while there's a high-impact red-folding news like NFP or CPI, but let's face the truth. Most traders will not be able to trade these high-impact news events, either because of their lack of experience predicting the outcome of these events, or their emotional reaction to extremely high volatility, which eventually leads to poor trading performance. Take a look at these statistics. The first statistic is from Bespoke Funding. We can see the results of past or breached accounts an hour before and after NFP. As you can see, around 82.7% of accounts got breached during this time window. That's a lot. I'm not saying you cannot be one of the few exceptions to pass the account, but the statistics don't lie. You want to position yourself with the highest probability of winning as possible. By trading these, you are essentially putting yourself into a low probability conditions. Not only because of the high volatility, but also because while trading these high impact red folder news, there's also a higher chance of your stop loss not being respected, experiencing bad fills, bad quotes, and widening of spreads. And let me tell you, these are not high probability conditions that you want to trade in. The second one is from MyFundedFX. As you can see, similar results to the first statistics. In conclusion, learn to differentiate low probability conditions and high probability conditions. And position yourself with clear intentions, knowing that what you are doing on the chart right now is in fact high probability trading. Okay, back to AMDX and XAMD. The first quarter dictates what the price is going to do and if it will be AMDX or XAMD. So, if the first phase consolidates, we can expect to see AMDX, aka accumulation, manipulation, distribution, and continuation or reversal. But if the first phase is expansion, we can expect the second phase to accumulate. From our understanding of how price books and our knowledge of Quarterly Theory, we can now safely expect to see XAMD, aka continuation or reversal, accumulation, manipulation, and distribution. Okay guys, let's break it down even further, but keeping it extremely simple so you can really grasp the concepts. In AMDX in the first quarter, aka Q1, as you can see right here, we have the accumulation. This sets the stage for the market cycle that we are about to enter. After Q1, the accumulation, we can expect the manipulation part. This is going to look like something like this. It's going to be a Judas swing into a higher time frame PD array, for example, breaker block, order block, old high or low, or something like that. So this is the manipulation stage. Right after the manipulation stage, we can expect to see the distribution stage, aka Q3. This is where you want to trade these patterns because this is the highest probability entry right here. Okay, this is how it's going to look. And after that, our last point of the quarterly theory AMDX set is Q4. It's X. It's either continuation or it's either reversal. So it can look like this, but it can also look like this, and it can continue its way down there.